Hey, welcome. I'm glad you're here. Have you ever stared at a stock chart and just felt completely lost? Well, today, that all changes. We are going to break down a real-world setup in Microsoft, step by step, and build a clear, actionable plan together. Let's get right into it.
I know that feeling so well. You see all those lines, the colors, the candles bouncing all over the place, and it just looks like noise, right? It can be totally overwhelming. Our one and only goal today is to show you how to find the signal in all that noise and turn what looks like chaos into a simple, straightforward plan.
Exactly. This isn't going to be some boring theory lecture. This is a hands-on practice session. We're going to focus on this one single Microsoft setup, and I promise, by the end of this, you'll understand the why behind every single number we talk about.
Okay, let's start digging in. The very first thing we have to do is understand the trend. And as you can see here, we're really looking at a tale of two different charts. This is such a critical first step because, believe it or not, different timeframes can tell you completely different stories about the exact same stock.
So look over here on the left side, the daily chart. That's our big picture view. You can see it's been in a pullback, right? The price is hanging out below that really key $506 level. But now shift your eyes over to the right. On the 4-hour chart, which is kind of our zoomed-in view, we're starting to see the first signs of a recovery. See that? The price just managed to climb back over its local key level of 484. This little conflict, this disagreement between the two charts, that's where our opportunity is hiding.
Okay, now listen up, because this is maybe the most important part. Before we even think about buying anything, we have to know where we're getting out if we're wrong. We have to define our risk first. This is our safety net, or as we love to call it, our safety valve.
Seriously, think of it just like that, a pressure release valve. It's the one number on the chart that tells you, hey, the pressure is going the wrong way and my original idea isn't working anymore. A safety valve is what keeps a small mistake from ever becoming a big damaging one.
So for this specific plan, that magic number, our safety valve, is $484.20. Let me repeat that, make sure you get it down, $484.20. This is without a doubt the most important number to remember for this entire setup.
So why that number? What's so special about 484.20? Well, if you look at that 4-hour chart we just saw, this level is a key area of support. The best way to think about it is like a floor. As long as the price of Microsoft stays above this floor, our idea about a short-term recovery is still good to go. It is our absolute line in the sand.
Awesome. Now that we understand the trend and we've found our safety valve, let's build the actual action plan. This is where we turn our analysis into exact, practical steps. So go ahead and get your virtual trading platform open and get ready to follow along.
You know, the process is pretty much always the same no matter what stock you're looking at. First, we're patient. We wait for the price to confirm our idea. Then, we set our virtual entry. Step 3, we define and honor our invalidation point. That's our safety valve. And finally, we set clear, logical targets for where we take our simulated profits.
Okay, here are the numbers for our educational plan. Write these down. Our virtual entry zone is between 485 and 486. Our invalidation, our stop loss, is set just below 480. Our first educational target is that nice round number, $500 even. And our second target is 506.25. Let's get these keyed into our simulation right now.
But wait, it's not enough to just blindly copy these numbers. The real lesson here, the thing that's actually going to make you a better trader in the long run, is understanding the why behind each one. So let's break that down right now.
All right, let's walk from the logic. First, why are we trying to enter between 485 and 486? Well, it's because we want to see the price prove to us that it can hold above our safety valve. We're not jumping the gun. Next, why is the invalidation below 480? That just gives the plan a little bit of breathing room below that floor. But if that floor breaks, our whole recovery idea is officially wrong and we get out. As for the targets, 500 is a big, round, psychological number where traders just naturally tend to take profits. And that final target, 506.25, yep, that's that major resistance level, that ceiling we saw way back on the daily chart.
Okay, we're almost there. Now for the final, crucial lesson. A great trading plan isn't just about lines on a chart. We also have to be aware of what's happening in the broader market. You know, the big events on the calendar that can move everything.
There's this classic saying on Wall Street that you'll hear over and over. Don't fight the Fed.
And all it really means is that major economic news, especially announcements from the Federal Reserve, can totally move the entire market and just steamroll any individual stock chart. You've got to respect it.
And if you take a look at the calendar for this setup, you can see why this is so important right now. Yeah, there are some smaller company things happening, but that huge one, the Federal Reserve interest rate decision on December 18th, that's the main event. An event like that creates what we call a volatility ceiling over the whole market, which is a big reason why our targets on this plan are pretty conservative.
And before we wrap this up, it is absolutely critical that we're all on the same page about what this exercise is for.
Please remember, this is not financial advice in any way, shape, or form. We are here to help you learn and to practice these skills in a completely risk-free simulated environment. Real-world trading involves very significant risk, so it's essential that you practice and build your confidence first. Think of this as a drill and nothing more.
So, there you have it, the complete plan. You know your entry zone, you know your exit if you're wrong, your safety valve, and you know your targets if you're right. Now, as you sit and watch this setup, waiting for the price to come to your level, what's the most important skill you're actually practicing? It's patience. The discipline to wait for your plan to play out, that's what truly makes a trader. Now go practice that.